We do have some extra time here, so maybe we can touch on opportunity zone.
Sure.
So someone exit again. I go back to this idea of someone exiting a large real estate portfolio. They no longer want to be active. It's going to be us in 20 or 30 years.
Exactly.
But now they have an opportunity to invest with an active operators like our group or other great groups that exist in the U.S., which they sit back and be passive and take the majority of the profits that exist in the deal, depending on what team you work with. But aside from these syndicated investments, there's also other options, which is the opportunity zone. So if you want to kind of on a high level tell us what opportunity zone is
Yeah.
and how this investment can take place and be tax efficient.
Yeah. And frankly, the qualified opportunity zone legislation. So it was passed in the 2017 Tax Cuts and Jobs Act. It was Donald Trump's first major piece of legislation in his, I guess, only term. I was going to say first term. But it identified certain areas in the U.S. that, based on 2010 U.S. census data, were lower income or met certain requirements such that the U.S. government wanted to incentivize the private investment, gentrification, development, improving the communities, et cetera. And this was actually a piece of legislation that was championed by Sean Parker. Sean Parker, if the name sort of sounds familiar to some folks, was the founder of Napster back in the day, the music streaming service.
Yeah, okay. He was in a movie, I think. He was in a movie.
He was Justin Timberlake exactly. He was the first president of the Facebook. Okay, when it was the Facebook as opposed to Facebook, right?
Yes.
So Sean Parker's a guy who has an incredible amount of wealth sitting in Facebook stock, right? Think about that. He was first president. Facebook is worth whatever it's worth now. And so he has this idea. Listen, let's incentivize private investors to take paper gains, that is gains that are not yet realized, gains on highly appreciated stock, gains on businesses that have been built to be, very, very, very valuable, and real estate as well. Let's incentivize these people to sell out of these highly appreciated assets and put that money to work in some of these lower income communities. They identified, as I said, it's about 8,700 different locations in the U.S. Pursuant to certain rules, you can invest capital gains of any kind: stocks, bonds, business, your Beanie Baby collection, if you were big on that in the 90s, and you get certain tax deferral benefits. You get a tax deferral until 2027. So if I have a taxable gain today and I invested into one of these opportunity zones, I don't have to pay the taxes in the 2021 tax year. I don't pay them until 2027. I get a 10% reduction in my tax bill that I do owe in 2027. And then the last piece, which is really kind of the home run, the main draw of the legislation, is that any growth you see on that investment, assuming you hold it for 10 years, is totally tax-free. And so what we're seeing in the opportunity zone space is most of these are ground-up development projects. And the reason for that is the legislation requires a doubling of your basis, right? They don't want you to buy a building, slap a new coat of paint on it, and call it an opportunity zone fund. The idea here is to improve the area, right? So what we're seeing in the real estate space is either development or redevelopment projects. And so if you're a qualified opportunity zone fund, and I have a client who sells stock and has significant amount of gain, and they reinvest that money into this opportunity zone fund, and it's a multifamily development project, and the developer builds this thing and we get it stabilized in year 3 or year 4. And then for the next 6 years, it's cash flowing for us. And that's income to the investor. At year 10 or year 11, the market is such that the sponsor looks around and says, hey, it's a great time to exit. We're going to get a great dollar figure for this project that we've built and we've stabilized. You sell. All the gain from the sale of that property is tax-free to the investors.
Incredible.
And that's not, the folks that are smarter than me talk about this being an opportunity that we haven't seen in a lifetime, in terms of having the ability to grow your money and then not pay those capital gains at all.
Incredible. No,
Yeah,
if the
that's really
quick
cool.
question, is there any caps on the rents that are being offered in these places, or is there any cap on the sale price?
So there's no cap on the sale price. There are certain regulations in the Opportunity Zone legislation itself that is geared towards stimulating the local economy or improving the local community. This does not have to be affordable housing, right? These can be Class A properties. So there's no sort of cap there, right? We're not getting into like low income housing with these projects, or I mean, you can, but you don't have to. But so there's in theory no limit on the profit that you can make on these projects.